China is making some major moves in the global economy, and it's aiming directly at the US dollar. Chinese banks have poured over $100 billion into bets against the dollar, trying to weaken its hold as the world's main currency. But this isn't just about money, it's about shifting power on a global scale. Here's how they're doing it. China is pushing to use its own currency, the Yuan, in international deals, partnering with countries like Brazil and Russia to trade without the dollar. They're even stacking up gold reserves to add more stability and reduce their reliance on the US. This big financial shift is happening as more nations look for ways to operate independently from the American dollar. This isn't just about numbers, it's about reshaping who has control in the world economy. Could this be the start of a whole new financial order? Stay tuned as we break down what China's moves mean for the future of global power and what this shift could mean for us all. But before we dive in, do yourself a favor, go ahead and like this video, hit that subscribe button, and turn on notifications so you don't miss out on the latest updates. We're here to keep you in the loop on global events, major financial moves, and everything impacting the world economy, so stay connected. In a significant and strategic escalation of its economic rivalry with the United States, China has set its sights on challenging the global dominance of the US dollar. For decades, the dollar has been the world's reserve currency, enabling the United States to exert considerable influence over international trade, finance, and geopolitics. Now, China is actively working to reduce its reliance on the dollar, positioning itself for a more independent and potentially dominant role on the world stage. This shift marks a potential realignment in global economic power, with ripple effects that could influence international markets and trade for decades to come. China's move isn't a sudden or isolated decision. It reflects a calculated, multi-pronged strategy involving some of the nation's top financial institutions, the central bank, and even direct influence from President Xi Jinping. From betting billions of dollars on the dollar's decline to pushing for the yuan's use in global trade, China's maneuvers are reshaping the financial landscape. At the core of this strategy is a fascinating yet risky maneuver. Chinese financial institutions have started shorting the dollar on a large scale. In simple terms, this means that China's top banks and financial entities are placing bets that the dollar will weaken. This tactic has seen Chinese banks take up more than $100 billion in short positions against the dollar. The expectation is that as the dollar's value falls, China will profit from the depreciation, creating a financial cushion for itself. But China's approach is more sophisticated than simply gambling on currency values. It employs complex financial tools, especially foreign exchange, FX swaps, to gain this advantage in a calculated manner. Through FX swaps, Chinese banks exchange yuan for dollars at preset rates, allowing them to essentially bet on the dollar's decline without directly holding on to vast amounts of currency. By the end of these contracts, if the dollar has lost value, the US counterpart owes more yuan, meaning the Chinese banks make a profit. This strategy helps China hedge against the dollar's dominance and provides a way to support the yuan, especially as pressures on China's currency and economy grow. The reasoning behind these actions is rooted in the challenges China faces with its own currency, the yuan, as well as with its broader economy. Recently, the yuan has been under pressure due to a combination of factors. The US Federal Reserve has raised interest rates to combat inflation, making American investments more attractive. This has led to a stronger dollar and consequently a weaker yuan, as investors move their money into dollar-denominated assets. Simultaneously, China's economy has slowed down, partly due to the after-effects of the COVID-19 pandemic and other economic strains like a housing market slump and growing national debt. This economic slowdown has only added to the yuan's decline, as fewer investors are eager to hold Chinese assets when the dollar appears more stable. In response, Chinese banks have ramped up their FX swaps and dollar short positions, effectively trying to shield the yuan from additional downward pressure. But even with such calculated financial maneuvers, the yuan has experienced its sharpest annual decline against the dollar in decades. Despite these setbacks, Beijing's commitment to this currency strategy remains firm. China's goal isn't just to stop the yuan from losing value, but to reassert its place in the global economy, making moves that allow it to operate with more independence from the US dollar's influence. At the center of these efforts is China's central bank, the People's Bank of China, PBOC. The PBOC has been leading the charge, implementing various tactics to stabilize the yuan's value without having to dip into China's foreign reserves. By supporting FX swaps, the PBOC enables Chinese banks to reduce the amount of yuan in circulation, a move designed to help maintain its value. This may seem technical, but it has a direct impact on how stable China's currency remains in the face of external pressures, such as the strong dollar and capital outflows. The PBOC's interventions, however, come with risks. Should the dollar continue to strengthen, Chinese banks could face substantial losses. Estimates suggest that losses from these financial positions could range from $5 billion to as high as $16 billion if the dollar doesn't depreciate as anticipated. Despite these risks, Beijing's resolve remains strong. China's commitment to protecting the yuan and pursuing financial independence signals the extent to which the country is willing to take on short-term risk for long-term gains. This strategy of reducing reliance on the US dollar aligns with President Xi Jinping's broader vision for China's financial sector and its place in the world. Xi's ambitions extend far beyond merely strengthening the yuan. He envisions a global financial system where Chinese financial institutions and policies are as influential as those in the West. To achieve this, Xi is pushing for major reforms to build Chinese investment banks capable of rivaling US giants like Goldman Sachs and JP Chase. One of the most visible examples of this ambition is the recent merger of two large state-backed brokerages to create a $230 billion financial entity. This mega-merger signals China's intent to modernize its financial industry and prepare for greater competition with Western institutions. Xi's vision is for China to have investment banks and financial firms that not only thrive domestically, but also compete globally, shaping international finance alongside their US counterparts. This push to reform the financial sector also aligns with China's aim to build a more independent economic ecosystem that is less reliant on Western systems. As the United States moves to limit its economic reliance on China, such as by encouraging companies to diversify supply chains away from the country, China has responded by doubling down on efforts to reduce its reliance on the US dollar. This competition between the world's two largest economies has gradually transformed from a collaborative partnership into an economic rivalry that could have global implications. China's efforts to distance itself from the dollar aren't limited to shorting it in financial markets. The country has also pursued a comprehensive strategy of de-dollarization, aiming to reduce its reliance on the dollar in every aspect of its economy. A critical part of this approach has been increasing the use of the yuan, or renminbi, RMB, in cross-border transactions, pushing its role in global trade. By March 2024, the RMB accounted for 52.9% of China's cross-border payments, outpacing the dollar's 42.8% share, a significant leap from a decade earlier, when the RMB represented less than 1% of such transactions. This shift indicates a calculated move by China to normalize the RMB as a global currency, encouraging other countries to use it as an alternative to the dollar. China's de-dollarization strategy is also closely linked to its involvement in BRICS, a coalition of emerging economies comprising Brazil, Russia, India, China, and South Africa. This group collectively represents a significant share of the global economy and is actively pushing for a financial system that isn't dominated by the dollar. For example, BRICS has promoted the use of local currencies in trade and finance, providing an alternative framework for international transactions. The push to reduce reliance on the dollar gained momentum in 2022, when US sanctions on Russia limited its access to dollar-denominated markets. This move by the US served as a reminder to other countries of the dollar's power as a geopolitical tool. In response, BRICS nations have been exploring alternative payment systems that can operate outside of the dollar's influence. Initiatives such as blockchain-based payment systems and commodity-backed currencies are examples of how BRICS aims to facilitate trade in local currencies, minimizing the dollar's role. The significance of these alliances extends beyond just currency swaps and alternative payments. The BRICS nations are working towards a more multipolar economic landscape where no single currency dominates the system. Such efforts not only provide individual countries with more financial sovereignty, but also represent a collective push towards a global economy that operates independently of US influence. China's de-dollarization efforts are part of a broader global trend, particularly among countries in the global south that are looking to reduce their reliance on the dollar. For many of these nations, the dollar has long been a double-edged sword, providing stability in international trade, but also exposing them to the risks of US foreign policy decisions, particularly in the form of sanctions. The desire to find alternatives to the dollar has driven these countries to look for new financial systems and technologies. One key development is the shift towards using local currencies for cross-border transactions, a move that could weaken the dollar's grip on global commerce. Additionally, new financial infrastructures like proposed blockchain-based payment systems are designed to facilitate direct transactions between countries, bypassing the dollar altogether. The US dollar's share as the world's primary reserve currency has also been declining. In 1999, 71% of global central bank reserves were held in dollars. By 2024, that figure had dropped to 59%. Meanwhile, the use of non-traditional currencies like the Yuan in global reserves is on the rise, a trend reflecting the growing desire among central banks to diversify their assets and reduce their exposure to dollar volatility. Many countries have turned to gold as a safeguard, viewing it as a stable asset that is less vulnerable to fluctuations in the dollar's value. The trade relationships within BRICS illustrate the shift towards de-dollarization. For instance, Brazil's trade with other BRICS nations grew from $48 billion in 2009 to $178 billion in 2022. Such figures underscore the importance of these alliances in reducing dependency on dollar-based systems, providing a clear example of how emerging economies are reshaping their trade policies. These alliances reflect a broader realignment in global economic power as countries work together to establish systems and networks that operate independently of traditional dollar-dominated structures. In addition, the US dollar's role as a geopolitical tool, particularly through sanctions, has accelerated this movement away from dollar reliance. Countries like Russia, Iran, and Venezuela, which have faced US-imposed sanctions, have increasingly sought alternatives to the dollar for trade and financial transactions. This move towards de-dollarization is a deliberate strategy aimed at shielding these economies from US policy decisions as they seek to insulate themselves from dollar volatility. China's recent actions to challenge the US dollar's dominance signify more than a financial tactic. They represent a profound shift in the global financial order. By leveraging financial tools, encouraging the use of the yuan in international trade, and building partnerships with other emerging economies, China is actively working to reduce its dependence on the dollar. This push towards de-dollarization reflects China's long-term vision of a financial system that operates independently of US influence. China's path forward is laden with risks, from market volatility to potential economic backlash. But the potential rewards a more self-reliant financial system, greater control over economic policies, and a diminished influence of the US dollar make it a gamble that China seems willing to take. In pursuing these changes, China's bold moves against the US dollar mark a serious push for change in the global financial system. By encouraging the use of the yuan, stacking up on gold, and building alliances with countries willing to bypass the dollar, China is challenging the dollar's dominance in a big way. This isn't just about currency, it's about reshaping global power. As more countries lean into China's approach, we might see the beginning of a financial world where no single country holds all the cards. The risks are real, but so are the potential rewards, a future with more balance, where financial power is shared. Whether this shift will last is yet to be seen. But one thing is certain, China's moves have changed the game, and the world is watching closely. This could be the beginning of a new era in global finance, where multiple currencies play leading roles, not just the dollar. We'd love to hear what you think. Drop a comment below and let us know your take on this shifting financial landscape. How do you see China's moves impacting the future of the dollar and global power? Your thoughts are what make these discussions exciting, so don't hold back. And hey, if you enjoyed today's deep dive, why not give it a thumbs up? It really helps the channel grow and brings more people into the conversation. Also, if you haven't already, consider subscribing. We cover the latest in finance, global events, and so much more. Thank you so much for watching and for being part of this amazing community. See you in the next video, and until then, have a fantastic day. Bye for now.